Uh, if you go back, what was it, 3 years ago, when the Russian treasuries, the 300 billion, were basically sequestered, that's what kicked off the move away from dollars and central banks wanting to buy gold to basically hedge. They're thinking if Russia can have their reserves stolen, so can we. So if you look at a chart, the following day, gold started to look like a tractor in first gear. Now, silver is not just a monetary metal. I mean, there's industrial uses, medicinal uses, technological uses. Uh, all that demand overwhelmed the above ground supply. And as you mentioned, what the mines are producing is roughly, call it 850, 900 million ounces. And it looks like this year, we're probably going to end up with a demand of 1.3 billion ounces. So there's your shortage. And when you tell a human being that they can't have something, they want it even more. And what you're looking at now is the paper markets are beginning to break. And we're moving toward more of a, like you said with that commercial, I want my money and I want it now. We're moving toward a cash and carry market. The Asians do not trust contracts. The Asians want to buy something and have it delivered. And there's your problem. That's the only way to adjust the supply and demand, the only way to ration demand and increase supply, but slowly, because mines can't increase supply quickly. The only way to do that is to increase the price. And that's what you're watching.
Yeah, could you walk me through the shorts? So obviously you have these banks that have been engaging in this markets to make a profit or whatnot. And so, to my understanding, they sell these silver contracts they do not currently own, and they promise to deliver silver at a fixed price, a later price. And so they're betting on the price to go down. Like, okay, if we sell it to you at 60 today, we believe that silver is going to go down to 40 or whatnot. And so that's their margin or their profit. But the price of silver just keeps going up. And so what's happening with these shorts that are institutions and banks that are trying to short the market?
Yeah, it's not that simple. The shorts, I do not believe, understand that this has been going on for 50 years, or at least since 1986. Or I'm sorry, 1976, when the COMEX started and they had the paper contracts. Understand that silver is an extremely small market. Even at today's prices, I think the total global production is only 40 or $50 billion a year, which is nothing in today's world. I don't believe that it was profit oriented to begin with.
Mm-hmm.
The central banks colluded around the world to lease gold and have that gold sold into the market to suppress the price. The reason that was done is because gold is the anti-dollar, if you will. It's the anti-fiat. It's direct competition for fiat currencies. Now, if you suppress gold, you can't let silver skyrocket. So they suppress silver. But silver is easier to suppress because it's such a small market. And they got used to being able to smash the price, scare the speculators out, and then they made a profit. But overall, it was not profit motivated. It was simply suppression motivated so that these governments, particularly the US government, could borrow in unlimited quantities. If gold and silver are not going higher, that means the thermometer is not showing a fever. So if you break the thermometer, you can say there's no fever, gold bad, dollar good. Now the thermometer is breaking. The paper contracts, they sold way, way, way too many. And we're at the point now where people are standing for delivery. And guess what? The metal doesn't exist to supply all these contracts that have been sold short. And now you're seeing price go higher and these banks are losing billions of dollars.
Yeah. Wow. Okay, that's very enlightening. So obviously they profited along the way, but that wasn't the motive. And so
Right.
and you said that this happened back in the 70s. So this like post
Yeah.
Nixon.
Yeah. 1976 is when the Comex started trading contracts. And then, of course, you had the Hunt brothers in the late, 1978, 79, 1980. They tried to corner the market. They got greedy. Had they done it more on a cash basis, they couldn't have been pushed out. But what happened is they got leveraged on Comex, and Comex changed the rules and said we will not accept any buy orders. You can only sell. And silver went from $50 to $10 in what 6 or 8 months time. So they crashed silver, bankrupted the Hunt brothers, and that was done because the Hunt brothers used too much paper.
Mm.
In a cash and carry world, that could not have happened. It would have taken longer and more money for the Hunts to corner the market, but I believe they could have.
Okay. Okay. And you mentioned paper, so there's some different ideas of, or I guess speculation on how many paper contracts there is for like 1 ounce per silver. Is that number like over 100 or something like that?
I've heard numbers as high as 300 to 1. Also understand that ETFs were created, and as soon as they came out, I said this is going to act as a siphon for capital that was going to go into real metal, but now it's going into the ETFs. And if you look at their prospectuses, they don't have to own real metal. They can have contracts. So it was a way to dilute the buying power versus the existing supply. So you have ETFs on one hand, you also have the LBMA and CME on the other hand with uh, with futures contracts as opposed to strictly cash and carry, cash delivery.
Okay. Okay, got it. Yeah, that's a lot of paper for per ounce. That's a lot of paper. Do you have an idea of like what that looks like for gold? I mean, obviously they're engaging in these same types
Less.
of. It's less.
Yeah, it's much less. Yeah.
Okay. Okay, got it. So thinking about the where silver is at, folks are coming and demanding their metal. So you have the industrial use and such. What's kind of your outlook kind of moving forward? Like what happens from here? So obviously some of these shorts they're running for cover, whatnot, and I mean the price of silver just continues to grind higher. What happens from here?
It ends up in a failure to deliver. It ends up with too many people saying, I want my silver, and that silver not being available. The problem with that is, as soon as that happens, that day or the next day, you'll see the same thing in gold. Then you'll see it in palladium. Then you'll see it in platinum. Then you'll see it in other futures contracts. People will think, well, wait a minute. Have they oversold pork bellies? Have they oversold wheat? Have they oversold, whatever? It will lead to a break in confidence. And once confidence breaks, then you've got a problem in the credit markets because credit runs on trust, runs on confidence. Nobody's going to lend. I mean, talk about uh, an old story. Think about Wimpy on Popeye. I'll gladly pay you Tuesday for a hamburger today. If credit hiccups or if credit ceases, the entire world, everything you do, everything you touch, runs on credit. The real economy runs on credit, and so does the financial world, the financial economy. So once this affects credit, then it's game over. You'll see markets close, and that's where the great taking will take over. They put these laws into effect. The ink is dry. They didn't do that just in case. They did it to use it.
Got it. And so you're saying something very important, and I think that the audience should know because some people are getting into the metals because they see it as like, oh, this is a way to make money or to make more dollars, right?
But
And such. And but you're saying like this is something way more structural, a lot more
it's
structural risk and
systemic.
such, right?
Yes, it's systemic. The bottom line is gold nor silver can bankrupt. They cannot default in a world that is entering a default phase because we put too much debt on the books globally. The money does not exist to pay both the principal and the interest. So what have they done? What do they have? What are they doing? They're printing, money supplies over time have exploded, and the explosion of the money supplies dilutes the value. So now you've got you have a circular, going down the drain. The more they print, the lower the value of the currencies, and thus the higher price, if you will. Gold and silver do nothing. It's the currencies that go up and down. And the currencies are devaluing greatly, and there's your price explosion.
Okay, got it. So I'm imagining that you study cycles as well, in terms of to some degree. So there's been talk about the 80-year debt cycle, fourth turning. I mean,
Right.
the great taking and such. And you think about that type of world, right? And it's like, okay, well, this is unimaginable for many Americans, or just many, of the average folks. And so could you walk us through what does that world look like? I mean, when the dollar, just crashes or just loses a significant amount of value.
Yeah, we've been trained, if you will, from 1971 to believe that fiat, that the dollar is still. You'd be amazed at how many people still believe that the dollar is backed by gold. It is backed by nothing. It's backed by the full faith and credit of an insolvent institution. This is the end of, if you want to call it the fiat cycle, whatever you want to call it. This is the end of fiat. This is the flame out on fiat versus gold and silver, which are real money and cannot default.
Mm-hmm. Got it. What's your view on the equities related to gold and silver? Obviously, you got these miners that are getting the metal out of the ground. Do they become like nationalized, or like what's kind of your view there on is that an opportunity, or do you see that as more risk?
Yeah, no, that's a very real possibility that you see some nationalizations. I believe that equities in North America are probably most at risk because, look at the finances of the US, look at the finances of Canada. It would just make sense that they try to, they try to confiscate gold in the ground. If you go back to the year 1900, mining companies resembled what utility companies are today because they were mining money, and they would pay out a good dividend. They were very stable, solid. They were widow and orphan type stocks. As far as going forward, that it's going to be much different because we're not going to be in the world of 1900 going forward, because as far as mining concerns are concerned, miners are going to be they dig money out of the ground, and if that's happening in a backdrop where fiat currencies are failing, and we get to the point where gold and silver become very scarce for investors for purchase, what's your alternative? You're going to have to purchase mining companies if you want exposure to metal that you can't buy. And that's assuming that markets stay open. And I don't assume that, but it's assuming markets stay open. Just understand that if you're buying a miner, and there's all types of miners. There's explorers, there's juniors, there's majors, from the bottom of the chain all the way up. The more senior you get, the less risk there is, but you also have to look at the geographical area that your mine is at. Is it at risk of confiscation? What I'm trying to say is there's much more risk in miners than there is in the metal itself, but it may become the only choice if you can't buy gold or silver, if it doesn't exist to buy.
Our project is right in the southeastern corner of Wyoming. In the space of 4 years, fully engineered, fully permitted.
The ASIC is what caught my eye, $937 per ounce.
110,000 ounces per annum. First year of production is the most impressive. 132,000 ounces of gold, 24 million pounds of copper. You really want these things front-end loaded like that. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
Mm-hmm. Okay, so yeah, if it doesn't exist to buy, and then also we know that we've had confiscation in America's history and such, and so do you still see, or do you see confiscation as a current risk as far as, like, especially if everything goes to bad, like if we go have a significant crisis, like the Great Depression, right? Do you see confiscation as probable, possible? Where are you kind of at on that?
I don't think there'll be a confiscation because well, first off, people are worried about the government going door to door. That'll never happen because there would be 100 deaths on the first day. I mean, people come to the front door and say, give us your gold and silver, and we're going to get lead instead. What I think is much, much more likely is if they change the tax laws and they say, okay, whatever your cost basis is, you got to pay, pick a number, 90% tax on your gain. I think that's much more likely than confiscation.
Okay, got it. So
and that will create black markets, by the way.
Yeah,
when you create a black market and you tell a man he can't have something, he wants it even more.
Yeah, for sure. Yeah, that definitely, I could see that for sure. I mean, I kind of have my ways of getting my metal. So just thinking about going into next year, how far do you think we're along in this kind of breakdown of the monetary system? Monetary crisis and the crash of the dollar. Like, how far do you think we're along? Do you think, we have more time to buy? The Fed typically prints, a lot of money and bails out the markets and everything. There are a lot of issues with that. Obviously, I mean, we see, equities going higher, but they are going higher in nominal terms, not in gold terms, especially when you're looking at many of these, folks that are sitting on profits from the S&P, and you're like, well, measure that to gold, and it's not very much at all.
Yeah, if you look at that chart, it's ugly. Equities have rolled over to the downside versus gold. And I would say, you're asking me how much time. I would say just look at the charts. The charts are telling you there's very little time left. And my answer would be, we're just one crisis away from someone defaulting and breaking the daisy chain.
Mm-hmm. Got it. So what's your perspective on what's happening in the East? So you have this dynamic with the BRICS, you have the Shanghai Exchange, India's bringing in their silver and gold, and China's buying a lot of gold, and folks are saying like it's underreported of how much actual gold they have. And so just curious in your perspective on what's happening in the East.
Yeah, it's definitely underreported. I mean, I could show you on the back of a napkin how China, unofficially, but official reserves are at least 35,000 tons. And they say they've got 3,000 tons. I mean, they've done it. If you look at what's gone through Shanghai over the last 15 years, plus their production of 400 tons per year, they're so far above 3,000 tons of reserves. It's not even funny. I would just say that the East, Asia, China, India, they know the game is up. If we understand that there's, a fiscal mathematics problem in the Western world, they got smarter people than we are. They know. And just look at the BRICS. How many countries have joined the BRICS? 140, 150 countries? That's more than half the world. Well, I mean, way more than half the world geographically. they are moving away from the dollar because they understand that the dollar is going to basically default. And when I say default, there's two types of default. There's non-payment, which that'll never happen. But then there's overissuance, and that is happening.
Mm-hmm.
Overissuance is inflation, hyperinflation.
Yeah, for sure. I mean, especially, I mean, they'll pay you back in nominal terms, and the dollar's
Monkey
decrease.
money. They'll pay you back in monkey money,
Yeah,
monopoly money, whatever.
yeah, for sure. Do you have any perspective on what's happening with Italy? So I know the prime minister came out of Italy and said that the the Bank of Italy gold's holdings should belong to the state, and so there's been some
Right.
conversation there. And I don't know what that means for the EU. I mean, it does kind of seem like a fracture in the trust there, and the ECB was kind of critical of the Italian government for stating this or whatnot. And so, curious if you have any perspective there.
Yeah, I haven't followed that real closely, so I don't know how far along that is. But that's simply Italy taking an Eastern mindset and saying, "Hey, it's our gold. We want control of it. We want it within our borders."
Mm-hmm. Yeah, for sure.
You could go back, Daryl. You could go back to what was it, 2013, when Germany said they wanted 300 of their tons back that was being held in New York, and they were told, "Oh no, this is going to take like 3 years." And I did the research, I wrote an article that 300 tons could have been transported on 4 747 cargo planes. Those can hold 95 tons per plane. So they could have done it in what, 2 weeks, 3 planes, and then not a fully loaded third plane. Now, by 2016, 3 years later, Germany got their gold, but guess what? It was not their gold. What they deposited was returned to them with different registration numbers. It was not the same gold. But the United States had 3 years to source 300 tons.
Mm-hmm. Okay, got it. Thank you. Thanks for sharing that. So, which metals do you feel like the most like opportunity is? Do you? I mean, obviously, silver has moved significantly. Do you see this going a lot higher? And then some folks, they are position themselves as silver, then eventually will convert that to gold once the gold to silver ratio comes down.
Right.
The platinum group metals have moved significantly, platinum and palladium. Where are you seeing the opportunity, and what strategies do you think people should consider around that?
Yeah, I'm not real big on platinum, palladium, just because they're not truly a precious metal. I mean, they are industrial metals. The gold to silver ratio got as high as 120. Now it's what, 63, 64, something like that. Silver comes out of the ground at 9 or 10 to 1 versus gold. And for hundreds of years, it was discounted to 16 to 1. The reason it was discounted 16 to 1 from 10 to 1 is that it took 10 times the amount of weight when you're moving either gold or silver. It took 10 times more silver versus gold to move the same amount of capital. So because it was more difficult to move silver, man discounted it to 16 to 1. Then along came COMEX in 1976. The suppression scheme started, and silver's much easier to suppress. It's been suppressed for that 50-year time frame, and now looks like it's beginning to unwind. I mean, I would not. If you've got silver and you're wanting to convert it to gold, I would not. I'd do it in tranches. I'd do it in 4 tranches. I'd probably do a quarter when we got the 50 to 1, a quarter at 40 to 1, a quarter at 30 to 1, and then the last tranche of what you want your final mix to look like. You do that final tranche based on your gut.
Uh-huh. And what do you see in the future as far as like the role of silver? Obviously, you have this industrial use. Do you see it being more of a monetary, like the monetary demand, like increasing?
Right.
Because some folks would convert it to gold because they may see like, okay, well, silver's a lot more volatile and there's a lot of industrial components, and so let's go over to the gold, which has been majority monetary. And so, just curious in your perspective there.
Yeah, gold is the money of kings, the money of governments, if you will, and silver is the money of the people. And I do think that, especially China, but the East views silver more from a monetary mindset than Westerners do. So I think silver, and I'm not saying that silver and gold are going to become come currency. They're not going to you're not going to ever see convertible paper monies that are convertible to gold and silver, because they've already figured out when they do that, it converts, and then their supplies are wiped out. But I do believe that you're going to see governments back currencies with gold and silver, but not be convertible. Will be ratio back, 20%, 40%. I mean, I don't know what the number is going to be, but I do believe for a currency to be trusted, it has to have some sort of backing. And that's what the BRICS are doing. That's what the BRICS have been talking about, going on what? 6, 7 years now. I think that's where we're headed, is toward a ratio-backed currency, and that backing will be gold and silver.
Okay, yeah, appreciate you sharing that. So, what do you take of this whole stablecoin legislation that was passed? I mean, you had the Genius Act, and it seems like a rug pull in a lot of ways with the dollar, how they can get the demand for the dollar and devalue the dollar and everything. And so, just curious what you're thinking there.
That's all it is. It's artificial. It creates artificial demand for the dollar, because at this point, I mean, who are buying treasuries? Japan's not buying treasuries. They're selling them. China's not buying treasuries. They've been selling for a few years now. The demand for treasuries is no longer there, which leaves the Federal Reserve now not even a separate entity. Now it's underneath the Treasury umbrella. The Treasury, so it's the left pocket lending to the right pocket. That's the demand. So they had to do something, and that's what the stable coins are.
Mm-hmm. And how much printing of money? I mean, the Federal Reserve obviously they've positioned themselves to end quantitative tightening, and then position themselves to ease. They did just inject like $40 billion into the repo market and such. I mean, some people would say this is peanuts compared to COVID, but they are in position to be able to backstop the government. I mean, because the debt and the deficits continue to balloon and get way out of control. And so, just curious in what your outlook is on the Fed.
A very easy and very short answer: whatever it takes. They will print whatever it takes. And I mean, 2008, 2009 should show you that.
Mm-hmm. Yeah.
The Federal Reserve lent, what was the number? $17 trillion, more than half of that outside of the U.S. to support the system. And we didn't find out about that until 2010.
Yeah, for sure. And like, as far as the average person and becoming aware of this, obviously you've been writing about this for a long time. I've been doing podcast hosting on the metals for about 5 years. And so we've been trying to educate the average person on the importance of them. And so now you have like the big banks coming out, with targets on gold as well as allocation to gold and silver. What are you making of that?
I think they had to. I mean, if gold went from 1,300 to 2,000, and then chopped around and went from 2,000 to 24, 2,500, and then exploded not exploded, but like I said, the day after the Russian treasuries were confiscated, gold started going higher. The banks the banks can't tell you, don't believe your own eyes.
Mm-hmm.
So the market pretty much forced them to lend some credence, otherwise they become irrelevant. And I mean, the public, think about this for going on, it's 10 years now, 2015 and on. We've been fed nothing but bullshit in every way, shape, and form. All the government reports, oh yeah, we're running at 3% inflation. Really? What is that? 3% a month or 3% every quarter? We know that's wrong. Unemployment numbers. Really, only 4% of the population's unemployed, and you got 100 million people not working. The COVID jabs. Maybe you should talk about this if you put it on YouTube, but the COVID jabs, safe and effective, turned out to be what the alt media talked about, with the spike proteins, etc. No matter what the topic is, we've been fed bullshit. And people are waking up, and I think the banks understand that they can't tell a public that's watched gold run from $3,000 to $4,400 in what, 6 or 8 months. They can't tell them that gold bad, hold your savings in dollars. They can't say that. So I think they were forced into it.
Yeah, for sure. I could definitely see that. So outside of holding physical metals, what should else people be thinking about? I think you do a little bit of, kind of self-sufficiency,
right.
prepping and such. What are some other things that people should be thinking about in addition to owning real money?
Yeah, on my website, I have an icon up top. It's called Grizzly's Corner. This is a guy that can go into central Idaho with a pack of mules for 6 months at a time and come out fine. He's written a bunch of articles. He's put a bunch of links up of products that he's used. That's a good resource for prepping. When people ask me, how much should I put into gold and silver? My standard answer is whatever you don't want to lose.